Welcome back to the takeoff. As you can see, I'm shooting from home today. So I'm very excited about today's episode. We have my big brother here, Christian, who works in the protection industry for the past year and previously in the jewelry industry for the last 15 years. How are you doing today, bro?
Very good, thank you. How are you?
I'm good. It's been a very, very busy day. I think both of us were saying that we've had like busy days today at work. So if you listened to the podcast before, the listeners will know what kind of question I'm going to ask you. So what is your worst financial mistake?
My worst financial mistake was to have trusted a friend into investing into an online project that I thought the return was going to be good, but I ended up losing a lot of money. So that was a...
Wow, how much? Can you tell us?
About 9,000.
9,000!
Yeah, so
oh my gosh.
It wasn't a good experience, but then I learned from it, and then...
Wow, that's crazy. What did they promise? Were they saying that they can double your money or something like that?
Not just double, but it was return coming regularly.
Okay.
And obviously, I took the risk because I know in every business, obviously, there's always a risk, right?
Yeah.
But I didn't expect it to go the way it went. I believe the people were very genuine. Yeah. I don't think they came in with the intention to rob me.
Yeah.
Things just went upside down.
Oh gosh, yeah. You know, those kind of situations, they're always tricky because you never know what the intentions are. You know, these days I think there's a lot of scammers out there. They I don't know how they do it, honestly. I don't know how they do it, where the conscious part. For me, I'd feel bad doing that to somebody, so I don't know how they can, you know, do it with a straight face and say, okay, we're gonna take that. It could have been your last 9 grand. You know what I mean?
Could see what they made themselves, so it wasn't a story. But I think we got into literally last part of it, and things were kind of crumbling down anyway. Wow. So I trusted, but then the result was catastrophic. So,
oh wow. Okay.
Yeah, that was a mistake.
Oh my gosh.
Among many other mistakes.
Sorry about that. That's fine. That's fine. I mean, mistakes are there to be learned, right? That's what we do. So can you give the listeners a bit of an insight into the day and life of yourself? So we talked about you like working in the jewelry industry before, and now currently you're working in the protection industry. So give us a little bit of insight into your day and life. Day
life, okay, obviously I try to wake up early. That's if I go to bed early. I can work from home or from the office. When I'm from home, obviously sometimes I work until late. Okay. So I'm up, I try to get to the gym if I can, early morning. If I cannot, obviously I'll go later. Yeah. Breakfast, get in the office and try to obviously do my admin for the previous customers that I dealt with the day before. And try to reach out, make sure you rest sometimes, not possible. Yeah. And then busy reaching out and trying to get as many people as possible to help, because I believe there is a great need to make people understand the importance of protecting their finances. Yeah, I completely agree with you, and you know, that's why I wanted to bring you in today so that we can discuss a bit more about it, the protection industry. As you know, we've done a previous episode on life insurance, but we want to, you know, cover some more other areas as well, because it's a very, very important thing, and like, you know, we don't really speak about it, especially in the black community. So before the protection industry, you worked in the diamond industry. That's very, very interesting, right? So you worked in the diamond industry. What was your role there? What were you doing? No, I work as a diamond broker. Okay. Actually, I went to get qualified at the Gemological Association of Great Britain. My family was trying to get involved into the diamond, being from the Congo. Okay. So, but we didn't want to do it the very amateur way. We wanted to do it the very professional way. So the idea was to study, understand the process from rough to polish. Okay. And some people do it by experience. Some people go and learn, study. So I went to study that. Okay. And that was the reason why I got involved, because the intention was to actually move to the Congo and see if you could do the business there. Okay, to do the diamond broker business there. Yeah, get the rough diamonds and come and sell, or be a broker in between men from sellers to buyers. Okay. So that's what I've been. I'm not really out of it, because if there's a project, a job to do now, I'll still do it. So you still do it. Okay, wow. But why diamonds? Because it's so unique. Like I'm even wondering, how can I get into something like that? Well, diamond is, you know, very precious, obviously, commodity that is expensive.
Yeah.
And if you do it properly, you can get money, right?
Okay. Yeah.
Some people get rough diamond and sell the rough. Some people get from rough to polish.
Okay.
Obviously, to maximize the return.
Wow.
But the idea with me studying that was to be able to get it from the rough to the polish, so that you make more.
Wow.
By understanding the type of rough you have, you can predict how much you leave here.
Okay. So in that case, would you, like, when you get a diamond from the rough, you're going to be interrogating it, you're going to look at it to see it's like legit?
Yeah, you grade it. So that's my role, JM diamond grader.
Right? Really?
So I'll get a rough stone, and from the size of it, the clarity, the color, I can tell that when this stone is finished, polished, the price will be this. Okay. So I can offer to buy it at this price because I know how much I'll make here.
Okay.
But once you don't know, then you can just get a big stone, thinking it's a good stone, but the clarity is poor.
Yeah.
And then when you get to the finish here, the price is not as intense, so you could end up losing.
Okay.
Because you didn't know how to grade this.
Okay. Wow. I mean, a lot of people, like, thinking about it, because, like, you know, I bought an engagement ring and I spoke to you about it last year, buying an engagement ring, and I think there's a lot of people out there buying an engagement ring. They're probably buying like overpriced stuff. So how does somebody, like, figure out if what they're buying is like overpriced, is not worth it, like they're paying triple, double, and it's a bad diamond?
That's the problem. The people don't know. People just see little shiny stone, very well cut, well polished in the shop, and then they go for it without even knowing the exactitude of the clarity so a little bit of an education, because I did help a guy in Canada looking for an engagement ring like yourself. He was ready to fly me to the Congo, which I did, to get the rough stone, bring it over, get it polished, and then sell it. So the process for me flying there, get the stone, buy the stone, get it polished, was still cheaper than the value of the finished polished stone in the local shop in Canada.
Oh my gosh.
Almost twice the price.
Wow. That's crazy.
Yeah.
And better value, obviously. You got better quality.
So, and then he had the story to tell his wife that, this diamond that I had to get someone to go all the way to the Congo to get it to bring it over. So the story was obviously beautiful for him and his wife.
Yeah.
But you can cut the price. Not that I'm ready to fly again to go get diamond. But if I have to do it, if someone is ready to pay for it, the value of everything went to 5.
Okay.
Traveling there, buying the stone, the rough stone, bringing it over, get it shaped and cut and polished, and the same shop was valued in the local shop there about 9.
Oh wow! Okay, wow, that's insane. So I guess my next question is, why are you not doing that full time anymore?
Well, I could, but the thing is, this country has got many, tax regulations that are pushing away the customers from the market in Dubai and Antwerp. Most of the people that used to bring the stones here are preferring to go there. I could have, I can decide to go myself and get the rough stone and bring it over, but the process is a long process. I enjoyed it. I still enjoy it. It's something that I'm not gonna, turn away from. But you've got to have an endurance and be willing to, wait for the process of rough to selling. It's sometimes I'm not away from it. I think I'm still.
You're still in it. Yeah, I mean, you do say that you're still doing it, so that kind of makes sense. I was just thinking, like, what tips could you say for the people to make sure that what they're buying is of good quality or it's like a fair price? What tips would you give them? Because not everybody knows a diamond broker that you can speak to.
Yeah, obviously, you've got to the only way that someone can at least make sure they're getting something genuine is if the stone has a good certificate, right?
Okay, certificate.
Because that's literally for me. I say it's the passport of the stone.
Yeah. Okay.
So from then you know that the color is this, but the certificate has to be genuine.
Okay, genuine certificate.
Yeah, GIA.
GIA. Okay,
American
I've heard
one.
of that. Yeah.
The GMA. The I don't know why the Gemological Association of Britain certificate is not as
not as prestigious.
Yeah, as prestigious as the GIA.
It's because American.
There are many other providers of certificate. But, if you get a diamond with a GIA certificate, you can tell from there and compare obviously online these days with Google. Everybody can find out pretty much.
Okay. So the GIA certificate is what you need. That's
pretty good. Yeah, there are other certificates as well. I'm not going to dismiss them. That's not fair for me. But when you look at the stone, look at the description of the stone from a certificate, then you know exactly what you're getting. Most of the time, people can't check the clarity, because the quality of the diamond is also the clarity. So if you've got many inclusions in there, you don't see, because you just see it shining in the stone, and then it looks big, but
it might not be worth that much as something smaller. I definitely learned that when I was looking.
So then if you learn how to check it with a little napkin, that's fine. But a good certificate in a good established shop should be able to provide something not too far from reality.
Okay. And is there a way for you to get like a second opinion on it after you buy it? Is there anyone you can go to as a second opinion?
You could, but you could. Sometimes people insure the diamond. So if you go to an insurance company to protect it, obviously they'll have to evaluate and to make sure it's exactly what you're bringing them, right? So that could be in a way the second opinion, right? Because you tell them I bought it 50,000, or let's say 10,000.
It's worth 10. Oh my god.
Yeah, and then when they check it, they realize it's not. Exactly that. So obviously they won't insure it for 50 because you could lose it the next day and then come and claim 50,000 while you pay 10,000. Or even if you pay 50, but the real value was 10. You know what I mean?
Yeah, that's why you got. So that's like a nightmare scenario. That's a nightmare.
But I think these companies are trained to check the authenticity of the certificate to know that it's genuine, and to check because if you bring me a stone, I should be able to check what you're presenting on the paper, and by grading it, I'll be able to match. So an expert will be able to match that. So if you want to go to another shop or jeweler and say, I got this diamond, this is the certificate, would you just confirm that it's about that? Obviously, it won't be exact, but it should tell you that it's exactly. If there's a big gap, then obviously that's a problem.
That's the thing, and that I think that's the worry for a lot of people who are buying expensive jewelry, especially like engagement rings. They're worried that I was worried, right, when I was buying mine. I was like,
what did you get? What did you end up?
I got it was a sapphire. I got a sapphire, so I was even more worried because obviously I'm not expert in it, right? So I had to obviously I spoke to you. I got it checked by the insurance as well, and it was legit. It was all fine. But you just worry about it, right? At some point, if it's not going to be good, So no, thanks for that. Thanks for talking about that. It's really, really interesting. There's not a lot of black people that are in that that industry, so it's very interesting to hear it from. Have you ever considered like your own jewelry shop, or is it just like it's too much upfront cost, or is it just
because exactly this is what bring the cost. Bring up the cost usually, because you've got to pay shop and staff and all that. But you could do it, you could make more money without having to. You could actually provide to the shop owners. And I used to be amazed walking into jewelry and just to see the price of the stone. But when I look at them and realize that I can actually get it for this much, but then you understand, a shop has to pay tax and all these things. But no, it's gonna be a bit much for me. I like just provide or be a middleman.
Be the middleman,
recently someone was buying a 64,000 diamond for the fiancé.
Yeah.
We helped them get it.
Okay.
8 carats, and
wow,
they were happy.
That's a lot.
Yeah.
64 grand.
64.
This person must be a millionaire.
I guess so.
Yeah. I mean, 64 grand ring. Yeah.
For a diamond, you must have about a few millions.
Yeah.
So we do have people that way, and some people still come to us. By all means, if they want to get, I'm not promising they will be cheap, but we'll definitely get you something good price, cheaper than obviously on the high street.
Okay, so, awesome. I love that. So it kind of ties nicely into protection, because you're also now working in protection. How did you get into the protection industry?
Well, strangely, it wasn't planned. Obviously, with the COVID, many things have obviously changed. I wanted to be a mortgage advisor, so I went to do the financial CFA course a few years back. The idea was to do it, but obviously I wasn't in a good position financially to be able to work in the financial industry, because you've got to be, good to be able to be even admitted. So I couldn't do it at the time, so I decided to let go. But this time around, an opportunity came, and I thought, well, with the COVID and things changing, the idea that I could work on a kind of self-employment basis was very good for me, because I've always loved to be a little bit independent. So I went back and I did my training, and I found myself back into this again.
Okay, wow. So why protection? And you said mortgage, but why not mortgage? Why not, any other sort of like financial services?
Well, because, excuse me, I was convinced, having experienced personal, loss in my family recently, and realizing how being this protection would have made a difference. Okay, so I'm a people's person, say. I like to help. By nature, I'm someone who's always there for people, and I realized that the best help is to educate people in understanding these things. It's not just to give them money. Exactly. So that's why I'm convinced, and that's why I'm in it.
I love that. I love that. I think, like we said, and I think we agree on this. Like, protection is very important, but I think like the financial education for a lot of people is lacking. Like, what a lot of people don't realize is, money is one part of the problem. You need to also understand how to manage that money when you get it, right?
Exactly.
Like, if you don't have the education, then you're not going to understand what to do with it. Like, if I gave you £1 million, do you know what you got to do with it? Do you know how you got to grow it? You know how you got to, manage it and make sure that you don't like lose it all in a couple of years? It's a true thing. We always look at like celebrities. How could they have got like bankrupt? Well, because you can spend things. Yachts cost more than $1 million, right?
Exactly.
Jets cost more than $1 million. So there's always going to be something to spend your money on, and that's how people, get bankrupt. So how have you found the journey so far?
Interesting, exciting, good opportunity for me to really help people. Make a difference in people's lives. I believe there's such a joy when someone is, let's say, trying to get life insurance and being declined everywhere, and you fight for them, and one day you get the news that this provider, like I had a client recently, accepted to cover them with a medical condition that the other would not even look at him.
Really? Wow.
It just makes you happy. I almost got emotional just to know that the person was covered. So it's an interesting journey, and I'll encourage people if you want to join in. By the way, we're recruiting.
As you said here, Christian says that they're recruiting, so you feel free to reach out to him if you wanna. You're interested in it. So talk me through like the different types of protection out there. So we kind of mentioned life insurance a little bit earlier. What other types of protections are there out there?
Well, there are many types of protections, of course, because commercial insurance and all that. But for me, when I approach people, I always I find that there is one very important insurance, which is income protection. I believe this should be compulsory. The same way people are told to get insurance for their cars. Because you wake up every morning, you're working every day, you have money, you have an income, you have a lifestyle, which is maintained by the fact that you are able to work with a good health. Once this is abruptly stopped because you're injured or unable to work, your money doesn't come anymore. And then all your bills are not paid. So you cannot seriously have project, right? Work and I want to do this and do that, and not protect, bit of your money, at least 60, 70, 80% of what you're making. So people should understand that. And I'm trying to reach out to the young people especially to say, protect your income because you're not invincible.
But everybody does feel like they're invincible, right?
They do. I feel the same way. When I lost my sister, for instance, I want to mention this 3 years ago in the next 3-4 days, it's always something that is happening with the neighbor. It's not to you. Until it comes to your door, then you realize, oh, I thought I was invincible. So I had a young man, 23 years old, went to play football, damaged his knee. So surgery number 1 didn't work, surgery number 2 still didn't work. He's depressed, he's in his room, he's trying all sorts because he's totally depressed, just thinking at 23 he can't really work, can't make money, and he's begging me to give him income protection for just £800. Now, I spoke to the provider, they're happy to cover him, but they are excluding that condition because I had to disclose it. Okay.
So if he had, in that situation, if he, before the knee injury, if he had it,
he would have had the money because now he's saying, I'll leave you my mom, she's going to be away from here, and I don't know, I need to pay my rent. But statutory sick pay, a couple of hundred.
It's not going to be that much,
So 23, went to play football, and he's in that position now. So if you think that he's going to help me when I'm older, it's a wrong judgment because you could need it now. And the good thing about you being young is that it's costing you almost nothing to get it now, rather than later. Some people tell me I got it through work. Well, but it's only attached to your lifetime at work. It's the benefit you're having because you're working there. Like if you change jobs today, whatever you have with your company is gone. Right?
That's true. That's true.
And then if you had your insurance booked at 25, it's cheaper than at 32 or 33 now. Right? So let's say you're working for a company and you decide to change at 45. I spoke to you about protection, and then you say no, at 45 you can't afford, or you can afford, but it becomes more expensive. So it's best to do it now. The youngsters should understand to do it now. The young man, 23 years old, come and take life insurance for $1 million. I'm like, really? He say yes, 1 million.
1 million.
So 500 with one provider, 500 with the next. And he says because of the lifestyle that he's going to give his family, he does not want the family to miss out on this opportunity. So he's going to invest, and he's paying until age 80, somewhere there. Less than £100.
That's crazy.
This is cheaper than some of the cars that they drive.
It's real talk. It's real talk. And I wanted to ask you, so when you're paying your insurance, it's premiums, right? That's what it's called every month, right? Is it fixed or does it change from year to year?
It's fixed. It's fixed. Level. Depends on what you have. You've got some of the income protection providers like Exeter. They can give you age cost reviewable or age cost guaranteed. So the price change, but most of the time we try to give people level and fixed so that the price stays the same all the way.
It's not like car insurance or home insurance where it changes every year, they're bumping up by £3 every.
If you want it indexed, obviously, if you want the premium to be indexed and to go with the inflation, then that will obviously change a bit. But most of the time, people take the level. Fixed premium. I love that. So you think income protection, because a lot of my listeners and subscribers are between the ages of 25 to 34. So you think income protection is what they need as well? It's the first thing. It's good to have the other protections as well, like critical illness cover or life insurance, because it's cheaper when they're younger. For the future families. Or private medical for those who can afford it. But definitely income protection first, right? If you can't afford the rest, fine, but do that one first. Because that just means that you maintain your lifestyle in the event of you not being able to work. If you have a company paying you a month, 2, 3 months, sick pay, then fine, the income protection will kick in as soon as they stop paying you.
Yeah.
So at least you have something, because you could be finding yourself at home for 9, 10, 11 months.
That's true.
And that will make a difference. Now, if you only have 1,500 insured for your income protection, times 10, that's already £15,000.
Yeah.
Not even your mom will give you, unless she has it. You know, unless. But if she has savings, fine. But to get 15,000 of you, let's say she got 50,000 saved, it's a lot of money.
Yeah, it is a lot of money.
So you see, just do it. These things are there to help you.
Yeah.
Right. If you say, well, I may not need it now, but you're working until age 67 or 68. I don't know what's the retirement.
That's true. Now. That's true. When you think of it like that, you're right. You're planning to. Well, a lot of people are planning to work for 39 to 40 years.
Exactly.
So why not?
So why not have it done now? Because and then if you go to your company, they say they're giving it to you, so you can always opt out because you have something set, based on your needs, because you spoke to an advisor like myself, who actually understand what the circumstances of your family, and it's not just the company trying to give it to you because it's a tax-free expense for them.
Yeah, that's true. I love that point. I was thinking, wills are talked about a little bit, and if some people say, look, they've got a will in place, right? So what's the benefit of having life insurance? Is there any benefits of having life insurance if you've got a will?
These are two different things. They don't even.
Well, what's the difference?
Well, a will is just literally instructions of what you want done with your asset and what you have. You say you want to do this. I know that obviously people find various ways this way to escape the tax man. So with a will, they can try to give gifts and try to reduce their assets, in order to avoid the tax, inheritance tax, whatever, if you're passing your asset to your children. But these are two different things. Will is good to have. It's good because then at least there is clarity. Well, they don't know no case of intestacy when you die, and then they don't know what to happen, and then you got to go through probate, and it becomes complicated. The process of finding out that this is your spouse, and they really that's something different. A life insurance is a lump sum. If we put it in trust, given to your family tax free. So these are two different things. You can't say I've got a will. And then
one's giving you money and one is you have to already have the money.
So the will is telling that I want this money to be given to this person and that person. If you have a will and you got nothing to give, what's the point of that will?
No, very, 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 very true. You don't have no assets to give. This is why you have to build assets, generational wealth. And we were speaking yesterday on the phone about what was it? Inheritance tax, right? And so life insurance, is life insurance impacted by inheritance tax?
Okay, now we have to put, if you take life insurance, we have to put it in trust.
Okay.
Because if it's not put in
trust... What does that mean when you're putting in trust?
Well, okay, let's say you've got kids. Small kids, and then you say, if I'm not here today, let's say your life insurance for 300k, right? It's not money that can be given to them, they're small. So fine, you've got trustees, people you trust, right?
Okay, so that's what trusts people you trust. Okay, I like that.
So you have a form filled out, and you set this fund into a trust, which you tell the insurance company that this amount is put into trust, Then if you don't do it, obviously, it will be added to your asset. So it'll be your house, it'll be this, it'll be that, plus, right? So that's why it is very important to do that, because then that is given to your beneficiary tax-free. Right? And fine, let's say you're facing inheritance tax. Obviously, there's no inheritance tax between spouses, right? And fine, you have a house valued at 700,000, for instance, and obviously the threshold is 325, plus there is an allowance of 175 if the house is your home. Now between spouses,
that's not a lot.
There's nothing
of allowance.
Almost 500. Right?
That's okay, but for a lifetime, I mean, it depends obviously when they pass away. You know,
so when if the father passed, obviously there's no inheritance tax between spouses. But then when the mom is going, if she has, in addition to the house, she's another property, she's this, she's that, and if that goes past the threshold, then let's say the family has to face inheritance tax on the excess. Right? It's not on the excess money, the money above what they're allowed to have tax-free given to their beneficiaries. Then to have money into insurance is also a good way to mitigate that. Especially if it's put into trust, it's given to you free, because let's say you have to face a 60,000 bill from the tax man, and you had 120,000 in insurance. So that could help, because some people say, I've got my house, I got this, I got that, I got all these properties. They'll put it together. They'll add, and
then they want their money.
As soon as you pass that threshold, that's it. They will tax you.
Wow.
And you're gone.
And
that's the kids. To have to pay that.
That's crazy. And I think, I think this is what the wealthy do, right? I always read about them putting stuff in trust. And
there is various way of escaping and reducing that. You can give, like in the will now, give gift. As long as it's complex, it's a vast subject, obviously. As long as it's given, like sometimes 7 years before you pass, there's ways of reducing that. So people need to understand and to learn that's a total different subject.
Tax planning.
So you find ways of making sure the taxman is not getting that money much out of you. I don't think.
I mean, you pay your lifetime taxes already, and then you'll get tax on top of what you built. So I don't get that. I'm not going to.
People get shocked. So I say another way of just get some money there, put it in trust. And most of these people take life insurance and they just leave it there. Put it in trust, and then it's money that can help in time of need. And then another product I didn't mention is critical illness cover as well, which people should have. A lump sum given to you in the event of you becoming critically ill. Obviously, your kids, for those who have kids, can be included in the policy and protected as well. So there are various ways, different providers, different benefits. And we can help you, identify the right provider who is, giving you the best. Because you can't say, I pay £6, I pay £10. When you try to compare your numbers with the next person. Because the circumstances are different.
They're different,
Maybe you got BMI problem. And your price has to be doubled because the insurance here is a liability. They see that you're unhealthy. And then this one is skinny. Is paying less. So these are different factors, medical histories that will affect the price. So you need to speak to an advisor. Don't go and compare. But I mean, it's hard, right? Because Go Compare Money Supermarket, their marketing is great, right? And they want their money. They want to get their commission too, right? So they're quite good at it as well. We did that in the past when we didn't understand how these things work. And then we realized that we took short term. People take short-term policies because that's how the insurance make their money, right?
And then they have to more expensive, keep on going up, more expensive.
For life insurance, for instance, it can only benefit you if you don't outlive it. So you take a short term, and then you're 30, and then you take 25, and by 25, 55, you're still alive and well, and then you think, oh, it's expiring. Get a new one.
You have to get a new one.
And then it's costing you more.
Wow.
But if you get it now for until 85, there's no statistics say 79 men are gone, 83 the women are. So you might not even get there.
And then that's obviously when it kicks in. I know it's a bit of a morbid thing, but it's to benefit the people that come in after you. So a lot of people would say, look, I've already got income protection and critical illness at work, right? So why do I need to get income protection? What would you say to them?
It's not bad that most companies, your big serious companies, they offer that to their employees. Obviously, this is as I say, benefits attached to the position, to the company you're working. But if you tell me you're gonna be there for until you die, that's fine. At 67, that's when you retire. Yeah. I don't think at 67 you are necessarily dead. Yeah. You could be. We don't know. Yeah. But if you know that you're gonna live longer past that, and then at 67, if you really want to give something to your loved ones, in addition to all the investment you may have, then you're gonna have to think of it by then, right? Which becomes more expensive. Okay. So some people I've made, some clients, they have good package, like 8 times the salaries. They are on 100K, so they'll get way more than what So they'll tell you about. If you ask them, do you really love your job? Say, I think I'm gonna change. If you are going to change, best to get something, small on the side. Yeah. Because by the time you lose this one, at least there's something else. So I'm not going to say it's bad, but you can have 2 life policies. You can have the one from work and one independently, and they will both pay. Yeah,
and it's probably even like so we talked about the careers, but entrepreneurs, do you find that because entrepreneurs, they don't get any sort of protection, so they have to look after themselves, and I guess if they're entrepreneur for life, are they on a bit of a slippery slope if they're not getting any sort of protection? Do you come across like quite a lot of people?
Yeah, you got Aviva, for instance, that has a product called Living Cost, income protection, well designed for a self-employed entrepreneur, whereby obviously they are capped to 1,500 monthly benefit that you can get.
Really? Why? That's so low.
Well, because they don't ask you to show your income.
Okay.
So they just have your GP note. And prove that you have a business.
Okay.
So let's say in your case you have a business and you don't even make 500 with your business. Like you can still claim 1,500.
Okay. Wow.
But it's bad. It's bad for people who make more. They make more than that. Obviously, they think 1,500 is not enough, but 1,500 is better than nothing.
Yeah, it is definitely better than nothing. I completely agree.
For business, there's a lot more protection that they can get. You will go commercial, public liability, all that we do as well. So they can always find a way of protecting themselves. I mean, if he's making, he's making good money in a business, let's say 3, 4, 5 people, and then if he's not here today, how is the business going to suffer? So there's also ways of protecting that business by putting a life to him, right? Or what you call group insurances.
Okay.
We offer that as well.
Okay.
So there's always ways to protect. I was speaking to a client the other day. He actually told me about someone who did something called a business protection. I'm not sure of the term, but during the COVID, many people were losing their businesses. But because he had that protection, he got paid a lot of money.
Okay. Wow. That's smart. And this is what you have to do for situations where you're not expecting it. That's what you're protecting yourself for. You don't know what the situation is, but you it's just a matter of when. It's not if, when. And that's for a lot of us. That's what it is a when.
It's a when. If,
but a lot of people like to take the risk.
Because for a car, I was telling you yesterday, you can have insurance for your car, but there's no guarantee that you might have an accident in the lifetime of in the lifetime of a car, even you driving from 18 to the time you pass. But you will certainly get ill.
That's the thing.
And you die.
It is. Sad as it is, that's the truth. That is definitely the truth. So in terms of the education, what do you think people can do to get themselves educated on this stuff? Obviously listen to the podcast, listen to Take a Podcast every week.
Thank you for listening.
But what else do you think that they can do to get educated?
I realized, obviously, being in this industry, that there is a great need of education. People, especially in our community, people need to understand, because if you speak to them very morbid way about dying. People don't want to talk about it.
They don't want to talk about it.
I had someone on the phone and I said, I just mentioned life insurance. She said, no, I'm not ready to talk about it. No. She put the phone down on me because she panicked.
Yeah.
So I speak to people. I want to speak to people about this protection as a way of investing as well. Okay, you're investing. Life insurance is an investment for the future.
Yeah.
If you get to age 80, the children probably at 60.
Yeah.
Or 55. Your grandchildren be happy to know that granddad had this protection, this setup since he was 30.
Yeah.
And we are benefiting from it now.
Yeah.
Right. So I like to speak to them about it as an investment.
Yeah.
There's various way of educating yourself on YouTube, this podcast, speaking to people, reaching out. We are very, very happy to tell the people what they need to know, because they will pay easily when they understand what it is about.
Exactly. And I think that's all it is, just education. And just, planning. You have to plan. The wealthy, what they're good at is planning. They plan every aspect of everything. Financial, tax planning, doesn't matter, because at the end of the day, they have to be realistic. You have to think about your life.
Exactly.
You've got so much assets, you've got so much money, they've got families, you've got to think about these sort of stuff. And I think money itself is a taboo, and then when you then talk about other aspects of it, that's even worse. For a lot of people, I don't want to talk about me passing away in the future. I don't want to talk about me getting sick and stuff like that. But if you need to go to the hospital, you talk about other health stuff. If you've got health stuff, you want to normalize that. So I think it needs to be normalized. From my point of view, I think it needs to be normalized. I think we should be okay speaking about it. It's not like we're going to speak about it every minute of the day, but we need to speak about it. We need to plan for it, and then we need to make sure that we're protected.
I was quite kind of impressed. I don't want to cut you. The young man I told you about, 23 years old.
Yeah.
He's planning.
Yeah, that's what you got to do.
He's telling, I want this, I want that, I want this, and it's amazing when you speak to a young man and he knows the advantages he has to have this cheaper.
Yeah. It's going to get much cheaper than I'm going to get. So what are some of the biggest reasons your customers have said that they don't need protection, and what's your thoughts on this?
I've not come across someone who doesn't need protection.
Okay.
When I see that sometimes when you tell them what they should have, based on what they tell you, their circumstances, sometimes they cannot afford it, right? And they will tell you that, I can't afford it. So what I'll do, I'll give them what they can afford. But to say, no, I don't need insurance, is because they think they have something.
Okay.
You offer them to review. Those who are, pretty cooperative to give me the policy to review, there's always something lacking.
Okay.
I've only come across one client who gave me a policy that I could not change.
Okay.
And I'll tell them to keep it, and I'll tell them to make sure they pay the premium.
Yeah.
Because he had until age 90.
Wow.
And he had about 400k in there. And the price was, because he got it when he was younger, and the price was really good.
Yeah.
And I told him, I couldn't believe he had that. And I told him keep it, but his wife didn't have anything, so I did help the wife. And because I strongly believe in long term.
Yeah.
Long term policies are the best.
Okay.
All of them, and again, there's only two providers, Zurich and...
Yeah, you were saying this, Aviva and Zurich. Are you saying those are the two best providers every week?
I'm not going to say they're the best providers, because Aviva is very harsh with people with certain medical conditions.
Okay.
Zurich will not even look at you if you have certain medical conditions.
Okay.
Royal London is good, they will give you until age 90.
Okay.
Scottish until age 90.
Okay.
So you've got... I'm not going to put one provider down.
Okay.
I'll just say that providers they are providers for everybody in their circumstances.
Okay.
But what I like about the Zurich and Aviva is that this option of conversion, which gives you the flexibility to not lose your policy if you get to that age, let's say 85, 83, and you're still alive.
Okay.
If you had it with the other providers, boom, it goes.
Okay, so that's definitely something to watch out for.
Yeah.
You've got to definitely make sure that you choose the appropriate thing.
The appropriate thing.
Yeah. you got to make sure. Yeah. Otherwise, you don't want to pay all that money.
And then you end up. If you go before.
Yeah.
Fine. Yeah. And if you don't, then if they tell you at age 83, that, okay, fine, you want to convert this policy from a term to a whole of life, it's going to cost you £500, right? Let's say you're insured at 300k, right? At 84, quite frankly, you don't have many years left, right? And then 500, but bear in mind, by then you've got children and grandchildren.
Yeah. Probably paying a lot as well,
Yeah.
And this is why you need an advisor, right? To help you with this and to make sure that you choose the right thing instead of going on to Money Supermarket. Obviously, we're not saying anything bad about them, but it's why you need an advisor.
You need to speak to someone. They need to understand where you stand. You need to understand what you want.
Yeah.
They need to assess your expenditure, how much you can save, because it's all about priority.
Yeah.
So if you check in your money, you realize that there's some money that you're paying for silly stuff.
Of course, there's always stuff. Thank you so much, Christian, today for taking us through, your experience in the protection industry as well as the jewelry industry. It's been a great conversation. It's been great to have you. You dropped so much insights into it. I feel like I've learned a lot today. Have you got any final words?
Really, I would like to encourage the young people that are listening to you. You're doing a great job. It's amazing. I think you should do it full time.
We'll see.
There is always a great reward into educating the community, because we all benefit at the end of it. Yeah. So I appreciate you having me today. Obviously, the setup is nice, and I think we should do it more. Yeah. But I'd like to encourage people to really, plan for the future. And prioritize, not just a nice car, because you're only driving the nice car because you're healthy. Yeah. So plan and protect your finance, do your protection for your family and loved ones, and then everybody is going to win. Yeah, I love that. And where can people find you? You've got social media links. Yeah, I've got social media, which is Quality Show, where you can contact me, reach out, and we are certainly going to be happy to speak to you and help you. I'll take my time. In an hour, 2 hours, I'll answer your questions, and that's what I like doing. Christian, he told me he spent hours the other day helping clients. So he's very dedicated to doing this and helping to educate people. So he's someone that you can definitely trust. Great. Thanks so much. Thanks, listeners, to listen to this episode of the Takeoff Podcast. I hope that you've enjoyed it. Hope that you've enjoyed this setup, and I don't know if this is going to be a permanent thing. It might not be. We might be back in the studio soon. I'm still planning and deciding what I'm going to do with that. But hope that you've found this episode to be valuable, and I'll see you next week.